So you've heard so far that we are in our first 4 videos, 2 particular important aspects. Firstly, what is it to be a balanced investor? And secondly, what is financial planning? Today I'm going to add the final piece of the jigsaw, which is what is asset management? What do you do with the money that you have to invest? So in terms of what most people look for is an investment that's safe, whilst beating inflation, the cost of living, and growing. Sadly, I have to disabuse you to say that investment doesn't exist. The reality is that to beat inflation, and particularly the inflation we have at the moment, you need to have something that takes risks. The likes of a deposit account in the bank, where you could say very little risk, will not give you the type of return that you need for your money to grow and outpace the cost of living or inflation. As a result of this, it's really imperative to have a professional asset manager, a person who is well aware of what's happening in the markets, who is following what's happening on a day-to-day basis, who is receiving a lot of market intelligence, which used to, in the old days, take reams and reams of people finding specific things about the market, whereas now with the internet, with the profusion of information that is available, is a much easier thing to do. So a professional asset manager has the ability to collate an awful lot of information in a very short time. So let me read you the actual definition of what an asset manager is. An asset manager asset management is the practice of increasing wealth over time, acquiring certain assets whilst maintaining and trading investments that have the potential to grow. That is the job of an asset manager. So maintaining to protect existing values if there is a market downturn, whilst then moving forward. And I would say that most asset managers work on the 7 out of 10 basis, which is if they can get 7 of their out of 10 decisions correct, it's a good thing. And that's what we look for within GPI in our world. This means that at any time, all the particular factors of risk that are affecting the markets are looked at. So let's look at the current situation, one of which I'm sure you're very well aware of. What are the big forces at the moment? Number one, we have raging inflation. We've seen over the last few months inflation go to the highest level it's been in many, many years. Why is this? We knew from the amount of money that was being put into the system to protect people during COVID that there was going to be inflation. What people didn't anticipate is that Europe was going to experience its first war since the Second World War. And that's really affected commodity prices because a lot of those commodities were coming from Russia. Obviously, we hear about oil and gas, but there are other things as well. That's really affected commodity prices, which in turn has made the cost of living more expensive. Energy prices have gone up drastically. And we obviously hear some terrible plights that people are in terms of being able to afford to live. So in summary, you could say the asset manager's job it can be defined as trying to make things grow whilst maintaining values when markets are falling. Warren Buffett put this a great way, and we have actually already used this quote in our first video, which is, be greedy when other people are fearful, and be fearful when other people are greedy. In other words, invest when people are thinking, I don't want to invest, and get out of the markets or go into a safer haven when everyone's saying, now's the time to invest. They're the two things to watch. And we have a particular situation like that at the moment, because you could say right now is a perfect time to start investing in the markets. So what have we said during these last videos? We've said that to be a balanced investor, it's important to have certain assets. We've also looked at financial planning as to what one of those assets really is, and some of the questions that you need to ask yourself to actually get along the path of a good plan, a good financial plan. So obviously our direction, our focus is the investment markets. That's one of the building blocks of having balanced investments. So what I want to do is look at some of the available investments now, some of the companies, and this is what the asset manager does. You know, I'm not an asset manager, so I have a fairly general knowledge, and that's what I want to share with you now. So if I was to ask you in general terms, what were the top companies, what were the 10 or the 5 top companies in the world 20 years ago? When I say top companies, I mean by market capitalization. Or if I said, what were the top 10 companies 10 years ago? What would you say? I mean, did you know, actually, it's going back a little bit further than 20 years, beginning of the 90s, out of the top 10 companies in the world, 7 of them were Japanese. And we had that on the back of the tiger economy that was particularly starting towards the end of the 70s, really through the 80s, and actually was starting to diminish at the end of the beginning of the 90s. So, I won't ask you to answer those questions, but let's look at the top 6 companies in the world today. I think you know which one's number 1, and that's Apple. You might not know, but can guess, the second one in the world is Saudi Aramco, the oil company. Both those companies very close to were being worth $2 trillion. The third company in the world is Microsoft. The fourth is Alphabet or Google. The fifth is Amazon. And the sixth is Berkshire Hathaway. Berkshire Hathaway, you may not know, is the company that Warren Buffett, who I did the quote from a few moments ago, works or started. He formed the company. And he's been a tremendous investor over the years and has said some very sensible things during making his money. So they are currently the top 6 companies in the world. Very interesting. If you go back a few years ago, Apple has drastically increased its value and constantly doing so. So they really are a market leader. It's very interesting that people look at companies like Apple as being a risky stock. It's IT. It's obviously in the high risk type of things. Yes, of course, the stock price moves up and down, but actually you could say they are more secure than any other company on the face of this earth. Now, if I went through individually these companies and you looked at what's happened, and it's fascinating. If I can direct you to an easy website, Yahoo Finance, it's an easy website to use to look at some of these stocks, these individual companies. But if you look at those companies, they are currently between 12% to actually some 48% down from where their highest point has been. What does this mean? It means that there is a buying opportunity. One of the things that history tells us is that all stocks go back to where their previous height, and then actually from that point move forward before you actually see another drop. It's cyclical. you see the market movements in that way. And you might think, oh no, that's ridiculous, it can't. And yes, it does. Constantly repeating what's happened in the past. So these companies, we can say, are going to have, during the next 2 years, a growth spurt, and then probably have a period of normal annual growth that we would expect. Okay. So we have two things actually working almost in opposition. We have the knowledge that stocks, individual stocks or funds, will go back to previous heights. That's one aspect. And whilst also we have the constant aspect, what's happening in the market now? And before I talked about what's happening currently in the markets, most of which you know. So what does that mean? It means that at any moment in time, when you look at asset management, you're looking at the balance between making the right choices and making those choices at the right time. And again, that's what puts the professional asset manager in the fray, because they generally can work on, because of their knowledge and diligence, what timing is correct. And that's why I said before, you're looking at getting 7 to 8 of those choices correct. You're never going to get 10 out of 10. It would be wonderful if you could. And the final thing I want to say is beware of hindsight. Hindsight doesn't help you. No one can see into the future. So equally, looking from today backwards and saying, I should have done this then, and this would have meant something different, is irrelevant. Let me tell you a story from my past. A long time ago, it was actually 1987, I bought a Range Rover. I had £12,000 of savings, so I put that down. The car was £18,000. I took the other £6,000 on finance over a period of a couple of years. If I would have put that same £12,000 into Microsoft in 1987, it would be worth currently just over $14.5 million. I wish I hadn't bought the Range Rover, but it's irrelevant. I did buy the Range Rover, and I had the enjoyment from the car, which obviously isn't as much as the enjoyment I would have got from $14.5 million, but nevertheless, what's happened has happened. You can't change that. All you can do is look into the future and say, look, I'd like to make some more intelligent decisions. And that's what asset management is all about. Thank you.